But I think what's hyper critical is the exit strategy, right? Like, what are you going to do with the property? And then not just what are you going to do with the property, best case scenario. What's a pivot, right? What's a plan B, right? And I think if you could underwrite with a plan A and a plan B, and then it's on you to execute to get to that.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Podcast. I'm your host, Micah Johnson, and today I'm joined by Mario, who's been making some serious moves, private lending and real estate for a little over 20 years now. Mario, welcome in, man. Glad to have you.
Micah, super stoked to be here. Thanks for having me. Look forward to hopefully having a great conversation.
Absolutely, man. I'm excited for you to be here today. I think our listeners are really going to take something away from your experience in the industry. I love getting to learn and speak with folks who have seen cycles happen before, can capitalize on opportunity, and really help us see what we're looking at from the grand scale of things. So let's dive in there. For folks who may not know you yet, what's your main focus right now and what markets you operate in?
Yeah, so my niche is investment property financing, whether that's a value add project and closing, have a short window to close, need money to rehab the property or ground up construction, and then also with stabilized investment properties as well. We specialize in niche financing that doesn't require tax returns or W-2, so really easy financing for the right product. So that's the main focus what we're working on.
Love that, man. So you represent all that other people's money they tell us to go make money with, right?
Leverage, yes. There's a method to having that, and the beauty of real estate is that piece of it, right? Leverage, but you do need to leverage responsibly. So yeah, look forward to chatting about
Oh,
that.
taking you deep there. Leverage responsibly. So start off with that. What does someone that may have experience doing it or is looking at that, getting
Sure.
that first private money loan, what does that mean to leverage responsibly? What do they need to pay attention to?
Yeah, I think the other side of that is, there's the basic math, right? You have to be able to underwrite the property. But I think what's hyper critical is the exit strategy, right? Like, what are you going to do with the property? And then not just what are you going to do with the property, best case scenario. What's a pivot, right? What's a plan B, right? And I think if you could underwrite with a plan A and a plan B, and then it's on you to execute to get to that, just like it's on me to execute to get you the financing. I think that's very important. So just to really quick, an exit strategy is you're buying a property for a discount, you're fixing it up, and then you're selling it for a profit, right? A fix and flip,
Right.
right? So that could be strategy number one. Strategy number two is like, look, I'm buying a property, I'm going to value add it, I'm going to fix it up, and then I'm going to hold on to it and rent it. And is that rent, is the market rent for the rehab property, is that sustainable, right? So having, that could be, plan B, right? Or it could be your plan A, right? So that's an example of the exit strategy.
Awesome, man. That's what the pros do. They don't go into it with just one thing in mind. And we all make our money on the buy. That's the key, is knowing what you're getting into, underwriting it well, but also underwriting it multiple times, man. So that's great advice. Knowing, okay, if this doesn't work out, because sometimes it doesn't.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
If you're listening and watching in out there, that first plan, something happens. We went through wild market changes quickly back in 2022. So there are things that can happen that adjust things. When you know you've got it on a couple different layers, one, it just gives you confidence in the deal all the way around, everybody involved. And two, your chances of being successful, man, they go way up.
Yeah. Yeah, and there's an element there, there's a leap of faith, right? It's an investment, right? There's no guarantee, but you cover your bases and you understand and you take the leap, right? There is a risk element to it, but on the other side of it, there's a lot of good things that happen, right? If you're operating at like, oh, I got to have this 110%, like it's not going to happen, right? You're going to lose the deal most likely because you're not moving fast enough, right? So you have to have enough of the information. I mean, there's books and stuff I love reading that talk about. I think Jeff Bezos is like, you have like 70% or 80, maybe somewhere between 70-80% of the information needed to make the decision, right? To make the play. And then from
Right.
there, you like recorrect. So that I think that's an important thing too, especially for people first time, like they're trying to get off and get their first one. Understanding that like there's going to be, I call it sweating up the white t-shirts, right, to get from
Right.
the other side, right? But leveraging responsibly, having the exit strategy, I think that balance is, a recipe for success.
No, man, that's so true. And like you said, there's always it is an investment. There is risk involved, knowing what you're getting into and knowing, man, it's always going to have that same feeling until you're doing it long enough and have enough things going. There's always that, "Ugh, like, what if, man, on this one that you're doing." But that's part of it. The best entrepreneurs, it's not that they don't feel that, it just doesn't stop them. That's not a reason to stop, right? So I want to encourage you, if you're doing this and you got that sweaty palms and or that white t-shirt's a little sweated up there, that's okay. Don't let it stop you. If anything, man, appreciate the fact that you're thinking twice about it, because this
Yeah.
is
Use that to
it's
heighten the focus, right? That stress
right.
creates you feel like, all right, am I underwriting the angles that I need to be angles? Okay, good. I am. I'm in there. So yeah, you
Right.
use that in your team.
Because once you do that, then what you have left over, that's just the nervous feeling that only happens when cool stuff happens. One of my favorite examples of it is I like golf, and Jack Nicklaus used to say, or he said one time in an interview, only amazing things make your hands shake, right?
Oh,
Only really cool things make you nervous a certain way. So when you feel that feeling, as tense as it can be, only a few things make you feel that way. So, like you're saying, readjust the mentality. That means one, you're playing the game, baby. Like you are
yeah.
on the field now. This is real. Go back and go over your plan, because that's what relieves it. Once you know your plan's in place, it doesn't make it go away completely, but it's mitigated. It's okay. It turns into more confidence and excitement than just straight like, I don't know what's going to
Right.
happen.
Yeah, just like blind. I'm throwing a dartboard blindly. Yeah, that's not the strategy.
No, man, hope is not a strategy, especially in real estate. I say it a lot on this show. Education is always step one. If you don't know, don't just do. Go learn, talk to somebody, figure it out. Even if it's someone like yourself, call them, ask, touch base. Say, if you're serious about being in this industry, one thing I love is people are happy to tell you about it. The right folks will say, hey, this is what you need to pay attention to. This is what you need to watch out for. But don't skip that step, because, man, the ones that do typically end up in a place where they're not enjoying paying that money back that they have to pay back when it's all over.
Yeah.
So for this market that we have coming up this year, what are you excited about? What's out there that folks need to know about? What's the landscape from your point of view, being in the lending space for so long?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, I would say access to capital, so access to getting loans, is still really, really good right now. It's as aggressive as I've seen it. Been in business the last 20 plus years, and on value add real estate, it's really, really good. I mean, you have stuff with experienced guys as little as 10% down and covering 100% of the rehab budget for super experienced guys, and then guys that are doing their first one, that you can get away with 15% down off a purchase price and rehab budget, and then get 100% of that budget financed there. So the leverage is still really, really good. And that's all, uh, bridge loans, right? These are 12-month term loans. So there's some execution that needs to happen within that. You need to take down the property, buy the property, you need to rehab the property, reposition it and sell it, or be in a position now to refinance in the long-term debt. Those are some different strategies there. So I would say the opportunity is there's still great capital to acquire new investment properties. And then for holding on to properties, there's a loan program called DSCR, right? Debt Service Coverage Ratio, where they don't ask you for your tax returns and W-2s, which, especially if you're self-employed, a lot of our people out there, our listeners, are investors, entrepreneurs. A lot of them can be self-employed, and it's very tricky to get a conventional full doc loan, right? Everything needs to be lined up. So this program doesn't require any of that. You could still get a 30-year fix. And with the right debt coverage, I mean, that stuff is setting down to, the sixes, the low sixes,
Man,
for a 30-year fix program. And, some of it, you can have the 10-year IO, which kind of helps with the cash flow on there as well. So that is actually really, really exciting to me, is access to that capital, because we talked about exit strategy, right? And, having a plan for it. So that program is a huge plan, versus before, if qualifying for full documentation isn't a plan, right? Because my tax returns or W-2s aren't there. This is a real plan, to hold on to the properties there. So it's a very
no,
powerful.
and you're right. Like when you're having to fill out documents and submit things when you're a self-employed person, that is coming from experience. It is not easy to do. So many things got to be lined up. So when you can have access to that, especially in our world, it opens up that other strategy. And again, it's
We're in a period of time where it's pricing better than as if you were showing your tax returns and W-2s. Yeah, which is wild, right? And I scratch my
right.
head, I'm like, what is going on? And really, what I think a big piece of it is, a lot of the financing on this stuff is institutional and Wall Street funds. So one, they're believing that the housing, finances for this, the collateral, right? The 1 to 4 units, specifically 1 to 4 units. I mean, we get into multifamily as well, 5 units and above, that have access to this program. But the sweet stuff is in that 1 to 4 on this specific program. So they, for a certain extent, they believe in this capital, which is great. But also too, I know of doing this long enough where it's supply of money too, right? There's so many people that are pouring into this space, that are backing these loans, basically, right? So it's driving competition down and making rates, where they're at. And, these are good loans. I mean, people have good equity in the property. In order to cash flow properly, people are in really, really good equity positions. And then if you're proving to them that there's more rent to cover the payment, the principal, interest, taxes, and insurance, or interest only, tax and then insurance, it's a good bet for them, right? So, uh, yeah, I think that's very exciting.
That is good news, man, because the deals are out there. I got friends that invest all around the nation. Is it tougher? Sure, but there's still deals out there to buy deep, and this is the kind of market where the best can typically find them. And knowing, it gives you hope knowing that when you find them, you can get the money that you need. Because that's always question two after question one. Can I find a house? Can I get the money?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And when you know that, okay, I've got that lined up, there's programs out there backing this, especially when you, again, like you're talking about, you can do multiple exit strategies because fix and flip, it's a hard one to predict on a downtrending market in a sense, because your hold costs get longer, the money gets longer. So making sure you have that backup becomes absolutely essential on that property. Like you were saying before, sometimes they don't pencil. Again, going into that upfront education, when you're looking at that deal, underwrite it well, get that multiple. So then you can take advantage of these different kind of programs. I'm hearing right now, a lot of folks are, buying and holding. That's the goal right now. It's not flipping well. Let's write everything this other way. Or midterm rental has been a popular one, still the buy and hold, but just different strategies for the properties to make sure they're creating what they need to. So let's talk about, I had it and it went right out of my head. Doggone it. Actually, it's the interest only. Let's dig into that loan for a second. I'm interested to learn more there. That's what it was about. So for someone that's listening, that's either not heard of that kind of financing or isn't super familiar with it, what does that allow them to do? Why is it such a powerful tool when you can just pay interest only for those 10-year periods?
Yeah. Okay. So first of all, on that loan, it looks at the cash flow. So how they calculate the debt service coverage ratio. And a lot of times it's necessary to have an interest only payment, right? Because it's a lower payment versus a principal and interest payment. So number one, it helps you qualify, right? And it gives you that extra cash flow and that you can, set aside for maintenance and whatever else. The other thing that people don't talk about a lot is on this on this type of loan, you can do major principal pay downs. Typically, it's about 20% of the initial principal balance, and then that'll automatically recast your payment, which is a powerful tool. You can't really do that on Fannie Freddie without like calling in and asking the servicer and having them evaluate the property and having it recast. So that lever where like, hey, let's say after year one and you sold another property and you weren't putting it to work anywhere specific. If you wanted to pay down the principal on there, then I think that's an amazing thing. The other thing is a lot of the individual people that I'm working with, they're value adding the real estate. And the idea of principal and interest paying the mortgage down is it creates equity, right?
Mhm.
Every time you pay principal, if we know, or the reality, the initial part of the 30-year fixed mortgage principal goes down very, very slowly, right? And if the idea is principal pay down and creating value, a lot of the people that I'm working with, they're buying the properties right. They're adding value to the property. So that is creating the big equity, right? That's the real
Gotcha.
equity pay down story. So if an interest only loan allows you to hold on to the property and qualify for a takeout debt, also gives you the flexibility where you can pay down the mortgage. I mean, it's still every month you can pay principal to the mortgage, right? That's the other thing that kind of like baffles my head sometimes. We're like, oh no. I'm like, every month you could pay, towards your principal, right? There's no rules that you can't do that. And then also too, to have the lever to, if you could come into, liquidity events, or you sell a property or whatever, you're making money and you want to pay down, you could pay down the loan aggressively, right? And that lowers your payment as well. So having that piece of it is pretty powerful, right? On
Yeah.
there. So it's a 30-year fixed mortgage, 10-year interest only. So after 10 years, you still have the same interest rate, and then the payment amortizes over 20 years. So the payment will go up pretty good, right? Or you can do there are programs out there where they have a 40-year fix. First 10 years is interest only, and then the last after year 10, the payment is a 30-year fix off that same payment. So interest rate stays the same on that one in, particular. So, I mean, that's getting a little bit of the weeds. Hopefully that kind of like sheds a little light, but for me, it's nothing to be, afraid of. I think where people kind of go back to in the mortgage meltdown in the 2008, 2010 kind of stuff, right? Or it started a little bit before that. People were on a 2-year arm, right? Or even more aggressive than that kind of stuff where things were adjusting. So this is nothing like that. So a 2-year arm would be like if it was only fixed for 2 years, and after that adjust, right? We're talking about 10 years, right? On on that specific program there. So it's
And
a
the
different.
interest rate doesn't adjust though, does it? Does it stay that same for the 40 years? So yeah, like the ARM, those are changing after a couple of years. Everything's kind of going up on you.
Yeah, on the arms. Yeah. So no, this a very popular. I mean, there are arm programs out there, but the one I'm speaking about, it's a 30-year fix, so the interest rate stays the same. Yeah, and then your interest only period is typically 10 years.
Love that. And like you said, man, it's nothing to be afraid of. It's a lot
It's a
of
total.
folks I know super successful in this space. That is their preferred loan type is to get that interest only, get that payment cheaper because a lot of times they're not even planning to hold that property for 10 years. They're just keeping the cash flow down so that they can, or keeping the cash flow as high as they can for qualification purposes, getting in, getting out. So it is, man. It's and then like you said, it's not the subprime stuff. It's not the things that sank folks back in the day. And that is typically like that you get from folks when they talk about like, wait a second, are you fixing to I don't want to go through 2008. What are you talking about?
It's a knee jerk reaction sometimes when if they've been exposed to the negative effects of that on that type of program. But man, and the reality is too, you have an option 30-year fix is completely out there, right, and able to do it, especially if the property's cash flows with the 30-year fix principal and interest, and yeah, so be it. It's kind of like your preference.
Yeah. Yeah, it makes sense, man. Like we are talking about earlier, there's deals. I know guys that they've definitely left their backyard these past couple years to still go find those heavy cash flowing deals. There's plenty of 1% opportunities and up out there. I was helping a friend into last year buying some houses out in Mississippi, and I was blown away. I was like, "Dang, okay, this is awesome. You can get in these little
Yeah,
pockets where it's killer out there." Again, it's those national statistics kind of mess with you, but when you start to niche down and get into the weeds of it all,
sure.
there's always deals in every market. So one thing I value about our conversation is there's always money in every market. It's just how do you get to it? What's that proper way? And then making those choices, educating yourself. So
Yeah,
Mario, man, I really
you fight
go
through
ahead.
the noise, right? Because there's a lot of noise that's out there right now. But if you can put your head down and dig in on the analysis, don't be afraid, right? Like
Right.
I mean, don't be afraid the whole time, right? There's a little bit of like that goes on, but dig in and see what the numbers look like, and then exercise. All right, what are my exit strategies, right? And then myself and my team, when we're running scenarios all day long, working with people nationwide, and we say, hey, yeah, we can do it, and this is what the leverage is going to look like, and tell me what the place is going to be when it's all fixed up, or tell me what the market rent's going to be when it's stabilized, and we run through those exercises, and if you can align the capital and you're comfortable with the basis, um, you know, some good things happen.
Yeah. Now you're on your way. I mean, that's part of your process is to get those things in order. That's what gets you that traction. I'd prefer to call it velocity in the business versus speed because it's the thing that starts getting you going because everything's always the hardest just the first time you do it. Once you do it the second time, once you do it the third time, and you start getting into it, then it's just being exposed to real estate, right? Most folks don't understand how big of a term it is when they talk about it. So one of my favorite questions when someone says they're in real estate, I ask them, well, what kind? And if they can't answer that, then I know they're not in real estate because it's which part of it, man. That is a huge term that you're throwing out there.
Yeah. It is, but it's so powerful. I mean, the wealth creation, you look at it because of the leverage piece, being able to control, a high asset with very, relatively very little, and having that whole asset appreciate versus, stocks and that kind of stuff, where the stocks, it's just appreciating off of what you put into it, right? And money, it grows and it grows like that, but you put a small portion of a real, you can, right? A small portion to what the purchase price is. And you get the opportunity to have it appreciate off the whole thing, right?
Right.
Which is very, very powerful piece, the leverage.
It is, man. It's why the American real estate market's the number one wealth generator in the world. There is a reason it's been that for a long time, because there's not many places you can do what you just described, where you can put in a little bit money and you get to fully appreciate, pun intended, all of the things that come along with that asset. That's the benefit of that brick and mortar. Like, it's a real thing, not just sitting there. Well, Mario, man, I appreciate your time today, your story perspective. Thanks for sharing with us about, DSCR loans, the amount of things that are still out there, that capital is available. For those that are listening that would, like to learn more about you, possibly touch base with you and work with you, what's the best way for them to find you?
Yeah, I would say, two ways to do it. You could send me a text at 562-787-8902. That'll go direct to me. And then also we'll send up a link for calendar invites if you guys prefer to do it that way. But, we'll just keep it simple. But Mike, I really appreciate you sharing the time, and it was fun.
Absolutely, man. Thanks for being here. Appreciate you bringing value. To everybody listening out there, make sure you check the show notes. We'll have all Mario's links there for you. Like I say all the time, go work with people in the business that have been doing it a long time, the ones that have seen it and you can learn from. Again, Mario, thanks for being here. Appreciate your expertise, man. For all those out there, if you got value out of today's episode, please like this episode. Share it with someone else who could get value out of it as well. And as always, please don't forget to subscribe. We appreciate every single one of you that follows along with us. I've got more conversations coming up with operators just like Mario out there building a real business in the industry. Thanks again for joining us. We'll see y'all in the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.